Yo, what's up, y'all? I have not done a weekly analysis in a long time. I was actually dealing with a lot of things, and as y'all know, as a trader, if you don't take care of your psychology and everything that's going on in your life, even like mentally and stuff, like this stuff can get pretty hectic. So we did win some trades last week. I might try to do those real quick. I'm like halfway trying to get ready for work. I gotta be at work in like an hour. I'm kind of just gonna try to buzz through these charts as fast as I can, right? So, what's been happening? I think it's been like at least 3 weeks since the last time I did a weekly analysis. So we're really looking at what's going on. 6 month CRT, right? That's crazy. I don't know how much we're gonna claim of that, but we're looking at the higher time frame because this candlestick just opened up this month. I know it says 5 months and 10 days, but the last time we did this, we just had this new candle. So this candle just started the beginning of this month. So that means we're in a whole new quarter. We just passed halfway of the year, right? 6 month chart. We have a brand new candle. Last candle was red. You see, we got this long wick on the upside, and I don't know if y'all see that line, but that's not a real markup. That just a little target profit we got there. 3 month. Same thing we see here. We see we kind of got that CRT, 3 month CRT, and that played out within from when this started in April. This started in July. The next candlestick of this chart will be in October for quarter 4 of 2026. So you know we see the uptrend now. We can kind of see that pullback, right? We're pulling back, and we're into that next month. We still have some. I have this area marked up. We got another alert right here, and I'm just waiting for price to drop. This is the area we want to get to. It's not going there. It actually came up. We're at 4,130 right now, which it just got up there within like today or like a few like this week, right? So it's been kind of going back and forth between 3,950 to about 4,100, right? So that 4,000 key level has been going crazy for gold right now. Gold don't know what it wants to do with it. We're still looking for this area, huge area we want to get through. 3 month, 1 month FVG. A lot of liquidity, but there's so much liquidity within here on the smaller time frame. So even though we're on the monthly, we see how prices are kind of breaking down with each candlestick. Nothing too major. We do have engulfing there. 3 more months of bearishness. But this is just that next liquidity pool. Weekly. So every one of those candlesticks is gonna get split into 4 candlesticks. Now we can kind of see my markups. We can see those psychological key level, and we see like 4K is holding, right? 4K is holding. It didn't. It dropped below. Did not close below last week. It closed above 4K last week. This week it opened below. So over the weekend it went down and then opened up on Sunday afternoon, just right below 4K, but then it's been up and it closed that gap, huge gap there. It kind of engulfed last week, so looking a little bit bullish. Only bad thing is that we're kind of gold wants to kind of buy up a little too soon for us, so we may have to wait a little bit longer. I was hoping to be this week. I mean, we see how last week ended. I was hoping to be this week we get our swing in, but we may just have another week or two. We'll have to see. Plus today's Wednesday. Gold just started kind of just dropping from the top that it's been this week. So yes, we can see there's a lot of liquidity here. We see we got taps here. Gold is like holding within this 4K though, just like it held before, right? Like last time it was around 4K, kind of like wicked, induced, and then it wicked below, closed above, and then opened below and closed above, just like it doing this week, and then kind of took off. So we'll have to see if it's gonna hold here, what it wants to do, because we do have a lot of areas that it could go for. Even up here, we got another gap. Candlesticks wise, we don't see nothing but engulfing. So if this week closes like this within 2 days, then we can see like a huge engulfing. But this is still open, right? So this is still moving. So we can't call this engulfing yet. But we do see bearishness. We'll see what happens. This is all the wick and it closes down here for the week. Oh man, that's gonna be beautiful, but it kind of needs to happen. daily now. So now this is what happening every single day. Every single one of these candlesticks is one day. We start to see how price really playing out. This week we can see the gaps now that are on markups that you couldn't see the last price or the last time frame. We're at this 30-minute SVG. Price is getting up to, is breaking above. We have a little bit of pullback on the bullishness. It's still holding pretty strong each day with that 4K. So 4K is a huge strong area. It finally closed below just to kind of break above the next day and holding above. So 4K is strong. We need to get below there, get some of that liquidity, get some more of this liquidity down here. But the whole thing is like, it's also making more liquidity on its way up. Like we got gaps here now. We got order block here now. So it's going to have to break through this order block, break through these gaps, and really get some liquidity below. Right? We're not just looking at what we hope to get, but we also got to look at what market is still doing, right? So we can see gold getting up here soon. We don't want it. Like I still feel like it's early. Like if this was too early, then this got to be too early. All they did was grab a little bit of this liquidity, but we was never aiming for this liquidity right here anyways. When price was here, we wasn't aiming for that liquidity, even though it made liquidity and then kind of went through and swept it. We're looking for more liquidity below. We were never aiming for this when price even got there. Right? We was always looking for the liquidity below there. So it do got a little bit of liquidity down here at about 3,915. I got my markup at, or my alert at 3,900. Just want the price to kind of get there, knowing what is there, because I have yet to get there. 3,900 flat. We're hoping we can see 37, 3,800, but if gold can just drop below 4K one more time, we might start to at least day trade it in between this area. We can see, I mean, we had some consolidation before. It looked like we're kind of getting to this consolidation zone, right, where price isn't breaking out of this box. We can see that it's been within the same range since about June 18th. So a little bit over a month, it's been within this range here. And ain't moving. So now we're in a cumulative phase right now on the higher time frame. Like, yeah, you can obviously catch some buys, you can catch some sells, and everything in between. Like some people sold this right here. Some people caught that sold. We'll look at a smaller time frame, but right now we're not trading outside of that price range that I just have marked up. 4 hour, which is one of my favorite time frames. Right, we may not go below the 15 today. May not go below the 15 chart, but you can kind of start to see where this 30-minute fair value gap is at. We redefined it from a 30 to the 30 from the 4 hours because this is way more defined than having it all the way like that, right? Huge key level when you could just focus more so on this area and how it's reactive to that area. It seems a little bit more reactive to that area rather than the whole block. A little bit easier to read. You see, even just now, it's still reacting to that. It kind of wicked, and then it kind of went back, retested the equilibrium, closed above, and now it's kind of retesting that area again. So we did see some sells from up here to down. We got all these highs here. Got a high here. More highs here. Just highs, right? Liquidity zones here. So we do have like an even an open gap, which it only wicked. So it only came through and wicked it. We didn't really close. Yeah, I guess it closed through it. But then when it came back, it only wicked it. Used it as a resistance to keep selling. So there's still a lot of liquidity areas above. We can see it kind of get up here. Use that 4,250 area as a resistance or even this equilibrium. Right, and then start to try to sell off if we're looking for those sell off to get into our liquidity zone to buy. We could see price buy up all the way up here before we really get our swing play in. So it's really just a patient game, a waiting game. Not looking for the trade each and every day, just trying to get that overall move where we can get in down here and go up. The huge thing you want to look at when trading gold, two things, right? First off, always start off your analysis looking at the news. Today, I mean, I'm not actively trading, but you always want to start off with the news, see what's going on. Currently, the U.S. and Iran are not in negotiations to try to end things, so they just been bombing each other all week. everybody's been getting bombed this week. It's been pretty crazy. Trade war 3.0. Tariffs been back in the conversations. Crude oil's been going crazy. The second thing you want to look at when you're trading is the dollar, right? The dollar and the gold should be moving opposite directions. So we see how price looking like this. This is what dollar's looking like. All right, go down, up, down. That may be too difficult. So they're almost aligned, right? So they're not like too different. Maybe right here, instead of having a hump here, there's a little hump there. It's about the only major difference. Back to candlesticks. Sometimes I just like the lines because it's a little bit So we had this buy area about beginning of July. Beginning of July, you can see kind of gold sold off. And then it kind of bought back up around the 12th, 13th. 14th, 15th, it was down again. So 12th, 13th, gold took this dump right where kind of the dollar kind of bought up and then dumped off some more around that 15th, 16th. Just started to buy up from the 17th. So from the 17th, right, we're looking at the 17th from the dollar. It's not going as crazy as gold is, right? It kind of retested, accumulated, and then kept pushing one way, broke this high. So now it's no longer bearish, right? It got a market structure shift where it's shifting more bullish. So we see the dollar kind of go up. Hopefully we see it kind of take out some more areas. I didn't do a top down with dollar, but I do have some markups. This is one chart I never really delete. We do have a high up here. Hopefully we can see maybe, and like literally if we're betting on the dollar, the gold to go up, we're betting on the dollar to crash, right? So hopefully we can see the dollar kind of go up a little bit more just for our entry, right? Wherever that high was, maybe around 101, 102, and dump off. Let's look at the daily for gold, right? Like it wouldn't be anything new within the last 2 months for gold to start to dump off from this area. If we see gold kind of drop off, because gold this is a higher price now for gold than it usually is, right? So this is a higher area. Hopefully we can see gold dump off. Plus I have a Markley OB marked up. That's what it says in this red box. If we go to the monthly, we have not broken that order block. So we have this whole order block marked up. If we mark up just the body of it, I don't have the equilibrium line on. When I say equilibrium, I just mean like 50% middle line. Turn that on real quick. Should be a purple line, right? So the dollar hasn't even like closed above that equilibrium. You could still say it's kind of respecting it fully. So that's how it's looking on the monthly. Just this one candlestick before a bullish momentum. All right, we have 3 large green candlesticks broke above all these highs previously from this low point. So after it came up, it did a little reversal candlestick, right? Indecision, decision, and then sold off. Now we're here kind of back and forth. You see some indecision, and then there's like a little bit of buyer's momentum, but then sellers took over shortly, and then you can kind of see like hitting support, come back up, not really breaking too many highs. It broke this high here, came down, didn't even get below this one, and then now it's came back up, and now it's higher, breaking all these highs. So we can see it either respect this order block, play in, maybe wick this fair value gap, this balance price range, right? There's this gap, and this gap. So they literally count, right? So this is literally a triple fair value gap. One from this candlestick here, make this a fair value gap, this fair value gap, this value gap, all the way up there. So, I mean, that's how it's gonna play. This could be a nice area to see it kind of wick off, sell from, or just at least reject. The most it's gonna do is fill it, right? It's not just gonna get here and probably blast by. Like it's probably gonna fill it. So, I say fill it, I mean like consolidate, and like you'll see price react to it. Like price is definitely gonna react to that area, and it probably has these other areas too. So we'll look on a smaller time frame, maybe on like the daily or the 4 hour, what it did for this monthly BPR. Back to the daily. Let's just see how we reacted last time. On the higher time frame, it looks like it just blasted past, right? But when we really look at the candles, we see that like price really played all around it, and the price had a whole indecision. So it got here. Someone probably seen that monthly order block, like, okay, it's ready to sell, right? Little indecision, but then it bought up, right? This is not saying sell, they're just saying indecision, right? You need to see a bearish candlestick after that indecision one. Indecision means not buyers or sellers. So you can't expect sales right after that. But I mean, continue buying up past it. Now it became inverted. After it inverted, it came through, had a whole gap above it, right? Volume gap. Came down, closed below it, just barely closed below it. All right, and this was like, if y'all see me mark this up just a minute ago, this is really it's not as, it wasn't as sharp. Like I kind of disrespected one of the wicks. Like if I was being real sharper, it would be even higher, so it would have broke it even more. Right, this wick here is kind of inside that monthly gap, so really, I mean, it should be marked up like that, but it still broke below. It still broke below. And even when I didn't mark it up perfectly. But now that it's a little bit more perfect, you can see how it really plays perfectly. It broke below, came back up for that gap, that and volume gap, and volume imbalance. Came back up there, closed inside that liquidity, then decided to close all the way through. Came back up, literally wicked that area again, probably making it balanced price range, and then sold off again. So there's no reason why I can't go up there and fill it out again. Like price, this is just the daily from the monthly. It's already very reactive to it. You can see this candlestick, like in just one day, it was above, it was below, and close all the way in there. Just for the next day open up on a Thursday. After market close, market opened back up above it and closed all the way through it. So this basically order block right there. Basically huge order block right there. So I mean, price was to get up here, I would expect it to sell. Like that seems pretty strong order block right there. Very strong bearish order block. Not even just this month's of BPR, but that order block right there. Right? Which is within that monthly balance price range. So even if it goes past equilibrium, that's a whole nother bearish signal. Which if it closes above all that, then boom, that's a confluence that it's very bullish because it was able to close above that very strong bearish confluence. So I mean, you gotta line that up when you're looking at gold, right? That's the whole reason we came over here to look at this to help us with gold. So we can see dollar still going up some. We see this week dollar's kind of shading down. That's why gold looks like it's going up this week. Just because the dollar's kind of going down a bit, but we can see some areas for the dollar to rise up and kind of reverse from, if that makes sense. Like we can see the dollar coming up just to go down from a higher area. So we're expecting dollar to go up. We can expect gold to go down just to go up, right? We're expecting this for dollar. We can expect the opposite of this for gold, which maybe not be that much of retracement, but that's where the mindset is with it. That's the overall mindset with it. So first thing you should do for all top down, look at news, see when that's popping, see when that's going, see how has been reacting. Thursday. That much for the US. Next week. It's gonna be a brand new month. Next week. right? The 31st is going to close on a Friday, and then Monday is going to be the 3rd of August. So a new monthly candle, and within a week. On the daily, I don't look at the trading sessions, but on the 4-hour, I kind of start to. My indicator should kind of be on. You can see it a little bit here. You can't see the trading sessions too well, but back to the 4-hour, we do have liquidity above, right? Just like we got liquidity above on the dollar that it could go to before it's ready to sell off into our entry that we look for. So we do have some lows. We got some lower lows. Price closed lower than has before. That should be a signal that it wants to keep selling, even though it bought up. If this is about the last high and this is the last low, and it's an order block, right? It closed below that order block. It has yet to reach these areas, so it hasn't even reached this high here, which is like a sub high and this intermediate term high. So, or maybe not even intermediate, it could be a shorter term high. So we definitely see it still look bearish, even though in the week, if we were day trading scalping, buys would be cool, but overall the trend is bearish because we see we got lower lows. It has not have a higher high, so this could be a lower high still from this lower high to this over high, which even here is a higher high, right? Low, high, low, high, low, higher high, low, lower, high, lower, low, lower, high, lower, low, and then we try to come up and beat some of those lower lows, but ultimately this would probably be the overall intermediate term high that we're looking to see overall market shift, right? All the little things between the overall move, because you can say you either move like this downwards, or you can just say like, yo, gold move like that. See what I'm saying? So when gold decides to come back up, we're not looking at each one of these. We're looking to see when it breaks that overall high. Which now that looks crazy, but that's what we're looking for, chat. Might as well clean up some more. So 4-hour. Let's go to the 1-hour. So now we can see time for the trading sessions a little bit. Sometimes on the higher time frame, it's not as visible. But I mean, we really got daily highs, daily lows, or even just weekly. So I got weekly highs and lows. We beat last week's high out the sky. So way above that. We do have liquidity up here. That'd be a bigger, maybe even a monthly high. No, we beat that monthly high, then we're taking off. So hopefully we can try to come up here for wherever the end of this week. Then next month we can get back down here and go. I thought it would happen this month, but maybe next week, right? 2 weeks. 2 weeks could be a time where, you know, this next candlestick on the monthly is gonna open up. Hopefully we get some bearishness to go up. Right, it's a little bit too soon for us. I don't like how price didn't drop too low. I mean, there's no difference from getting this entry than these entries, especially there's no CRT. This is a 4-hour. Yeah, there's no CRT, so it's really maybe there, but that completed. I don't see many CRTs here to play out, so we should see price start to drop off. It gets some lower liquidity than where it's been at. Hourly, we got the overall direction, so when we go to hourly, we can look more so into each candlestick and see what it's been doing. All right, we got order blocks here. We see a lot that price can go for. This price could go for those. We got a retest off the 30-minute FVG. Look how perfect that is. I mean, this wouldn't be a bad buy to get up there right now. as this fair value gap, close below it, retesting it, and it gets up there. Ooh, plus. That's a shooting star candlestick, came down, tested what? Equilibrium of this FVG, order block into more bullish structure. So right now, obviously the overall move is pretty bullish. We can see where that came from. There's an order block here on a higher time frame, bought up, still buying up, and we have multiple areas of liquidity within this area that we can expect the price to get into. So we can see that happening. This would be a nice reversal zone to hopefully, if we see the candlestick play out and we see some bearish tone, then we can expect gold to sell off. So we already kind of see the overall move of what we need to be looking for right now, just on the hourly. We'll peep the 30 just because this was a 30-minute FVG. I'll go back. There goes the opening gap. So you see this was like a long time ago. But it was that strong, remember on the 4 hour, this was like a huge area. On the 4 hour, it looked like this. And we redefined it to the 30. So that's why this 30 is still playing out, because it's really a 4 hour, but just redefined to the 30. So this happened all the way back in June 11th. The price is still playing off of every time. Taps, closed below, came back for liquidity, order block, sold through. Wicked again, sold through. Came in, wicked it, came back down for liquidity, order block. You can tell that's order block because there's a little bit of redness. Like 2 red candlesticks for a bought up, so that may be our order block. Bought up, close above, now it broken it, so now it's gonna be bullish. Came down, retested. There's fair value gap, it retested right here, shot through. Now we got other liquidity areas. Came down, retested it, came back up, came down, equilibrium, we're expected, came up, got some more liquidity, created that high, and then it came down, wicked below, came up, wicked the bottom that 50%. And then broke below. Once it broke below, it came back up, grabbed the liquidity. There goes a fair value gap. There goes the order block. Once it got there, tapped it, didn't close above at all. Broke down. Came back up, 50%, broke below, tapped this fair value gap, came up, closed above, wicked above, same area, order block as before. Didn't really get the order block before. Now got the order block, sold off. Wicked above, didn't close above, sold off. Came back up just for it to not close above, and then by the time it opened up next week, it's way below. Wicked above, couldn't really fuck with it, came down, right? So not even looking at like every single point of what it's doing, but just this 30-minute alone, and it's still reacting. It's still feeling every single part of it. Came up, closed above, 50%, right? It had some craziness, not exactly 50%, maybe even 75 would be better, but you see how Asian session came all the way up, closed above. So now it's a bullish area, fair value gap, and it's not order block, so fair value gap. So it can keep being inverted. And then the 4 hour is going to look like this too, right? The 4 hour is like this. So on the 4 hour, it could still be playing into that 4 hour FVG. Close above, came back in, close above again, sold off. London session was accumulating. Then after London session, it kind of wicked the low of London into this fair value gap within the fair value gap. Bought off, got all these highs there, getting some liquidity points, not breaking above those highs that we've seen on the 4 hour, 1 hour, but it's getting there. Kind of died off. Buyers died off. There's order block, sold off. Now we're kind of back in this area where it's respecting this 30-minute gap overall, right? So it looked like Asian session. We got this order block here. Asian session could be an easy area for a buy, right? Into that liquidity area. So I'm just going to do 50% in that order block. Wick would be below those wicks. I don't see any like fair value gaps or order blocks here, so except for maybe this one. If you wanted to, you could try to put it below this candlestick here for maximal safety, but that's It's a lot of pips. It's about 100,000 pips. So I would just do below this wick here, and then go for at least this high here. See if it wants to keep going up. You got a 6.0. What is that? How many pips is that? 50 pip stop loss. 50 times 6 would be about 300 pips up, and we're targeting these liquidities up here. So you can even target that 30-minute order block here. That's bearish, right? Because we might get there and then want to go for liquidity again. So that'd be a cool scalp. That's on the 30. We don't have to go to 5 1 minute. It's on the 30-minute we found the most. 15 is gonna redefine everything. 15-minute, we still got an order block here. Price is kind of playing into it now. Now we can see some more gaps. Honestly, if I already got equilibrium of this gap. Almost right on the nose. You see how that plays? Almost right on the nose. I would say it's inducing. But also this doesn't have a wick, so you almost count this as the equilibrium. Or as the whole fair value gap. Because it kind of just went straight up. But it was almost right there, right? So it's about there. So this stop loss will hold. I don't say it's going much lower than that. You can maybe give a little bit more breathing room than there. Not being right on it. Just give a little bit more breathing room. Below New York's low. Find an entry there. Or this gap here. Here to here will be about your entry. And then see if it wants to take off again, right? Because we see some bearishness, strong bearishness. Bears haven't technically died. We do see that buyers try to push it up, kind of failed, but we're still strong. Got engulfed the next candlestick, didn't do much there. Engulfed again. Now they're kind of buying back. Now they're kind of pushing back. After that long wick, you see that there was a long wick of sellers and they failed, and then buyers came in and engulfed them. So that could be the shift, especially because this is technically the last high. The price came down, came up. This is the last high that closed, and gold was able to close above that. So now it's a little bit engulfing, but this could be because it wants to play off of these areas that are right here, right? We got New York's low within this area. We got this wick into this fair value gap, which it could come back for again. And then you even got this order block just created that has not been tested until literally right now. So that could be a good entry. I might try to enter that mug right now. I'm gonna pause it so y'all don't have to wait and what. So I set my entry at 1433, which is what it says here. Stop loss at 147, maybe 0.5. And now that I see from my entry to my stop loss, I can set how much I want to risk, which right now says $5. It's gonna be blurry regardless. So I'm gonna go times 10, so I risk 50. 0.09 is 49.5, and then TP. You can say this TP1 because this order block. TP2, another order block. New York's highs. I was looking at London. It looks like London Asian session. I created an order block right at Asian session high. Y'all see that? I think we're going for the overall TP. Maybe here. I'm gonna go for this one. 4155. So that's about $198. And now I set it. So we'll set this over here. I'm gonna get a little bit more precise. See how that plays out. Entry was 133. Profit was 155. Stop loss. Price was 127.5. Alright, so that's the trade I'm in right now. And we'll see how that plays out. So from the 15, we'll give 5 minute little look, see what's going on. We do have a bullish order block there, so we can see wicks below. Probably won't close below there. For me to say, okay, this is a trade. As long as my stop loss is within this equilibrium, I think I'm cool. Which I mean is right there. So we do have a chance of being wicked out, but I doubt it because it's even lined up with this order block. So we'll see. The worst that can happen is me getting wicked out and then it buying up. So that's the lowest I could see it happening. Should be inbound now. Yeah, we're definitely in now. So we'll see. I just load up my chart. But we do have a balanced price range, hasn't been touched either. Like there's so much liquidity just being left behind for gold to just kind of snap. Gold can just go to any of these areas and buy off. Right, so even though it's kind of like intermediate, I believe that on the lower time frame, we still got areas that it still wants to go higher, even though it got areas to dig now. Like it's not going to sell off, go all the way to our lows yet. I don't really see that happening. I think it wants more liquidity than where it stopped at here. Even though if that's what it is, then great, right? We're looking for buys way below here. I just don't think it's ready to sell yet. Not all the way. If we drew a horizontal line from where it closed and look over, even on 30, like I think there's more liquidity it could go for. Order block, fair value. Yeah, like I see some resistance from this area, but I think it wants some more. I think it wants some more. So we're gonna bet 50 that it wants some more, and we'll see. That will be gold analysis. We're looking right for price. Get a little bit more liquidity so it can sell off into here within the next 2 weeks. Get into our overall position that we want. This liquidity pull down here so that gold can buy up maybe at 5-6K by the end of the year. 37-minute analysis with the entry.